When you think of samurai, you probably picture stoic warriors with swords, not desperate debtors on the verge of financial collapse. You imagine honor, discipline, a blade so sharp it could slice a falling leaf in two. But what if I told you that their mountains of debt and their desperate scramble to escape it accidentally created the blueprint for modern Wall Street? This isn't a story about glorious battles. It's about how Japan's elite warriors, paid in a fluctuating commodity and trapped by centuries of peace, unknowingly sparked a financial revolution. This is the incredible, almost unbelievable story of how their solution for getting some quick cash became the very foundation of the global futures market we know today. So, how does a warrior class end up inventing high finance? It all starts in the gilded cage they were living in. Our story begins in the Edo period, a remarkable era in Japanese history from 1603 to 1867. After centuries of bloody civil war, the Tokugawa shogunate finally unified Japan and imposed a rigid, lasting peace. For the samurai, the professional warrior class, this was a huge problem. Their entire identity, their social standing, their very reason for being, was tied to war. And suddenly, there was no more war. The shogunate, wanting to cement its power, moved the samurai from their country estates into castle towns and cities like Edo and Osaka. It turned them from landowners into bureaucrats. Their swords became more ceremonial than functional. They started practicing calligraphy, attending tea ceremonies, and taking on administrative jobs. In short, a class of warriors became a class of civil servants. But the biggest change was how they got paid. Instead of land, samurai received fixed stipends, mostly in rice. This rice, measured in units called koku, was their salary, though sometimes it was supplemented with silver to help stabilize its value. For a society that was rapidly becoming more urban and commercial, this was a terribly inefficient system. A samurai couldn't pay his rent, buy fine silks for his wife, or settle a tab at a tea house with a bag of rice. He had to sell it first. And this is where the trap was sprung. The price of rice was anything but stable. It swung wildly based on harvests, weather, floods, you name it. A bumper crop one year could cause prices to collapse, wiping out a huge chunk of a samurai's income overnight. But their expenses? Those were fixed, or more often, rising. Life in the city was expensive, and they were expected to keep up appearances befitting their elite status, a dignity that was getting harder and harder to afford. Imagine being an elite soldier, a decorated special forces operator, but instead of a paycheck, your salary arrives as a truckload of grain. In wartime, that food is priceless. But in a time of peace, where all your bills, your mortgage, your car payment, your kids' tuition demand cash, you're at the mercy of the grain market. If the price collapses, you, the elite warrior, are suddenly broke. This was the reality for hundreds of thousands of samurai. They sat at the very top of the strict social hierarchy: samurai, farmer, artisan, and merchant. Yet, economically, they were sinking. Many fell into a spiral of debt, borrowing money from the very merchant class that society deemed their inferiors. Their status was a gilded cage. They looked powerful and privileged, but in reality, they were prisoners of a financial system that was leaving them behind. They were warriors without a war, aristocrats without cash, and they were desperate for a way out. The epicenter of this crisis wasn't the shogun's capital in Edo, but a bustling port city to the south, Osaka. Known as Tenka no Daidokoro, or the nation's kitchen, Osaka was the undisputed commercial heart of Japan. Its network of canals made it a natural hub for shipping and trade. If you wanted to buy or sell anything important in Japan, you did it in Osaka. And the most important commodity of all was rice. The feudal lords, the daimyo, stored their massive collections of tax rice in imposing warehouses called kurayashiki that lined Osaka's waterways. These weren't just storage depots, they were the financial nerve centers for each domain. Here, the agricultural wealth of Japan was auctioned off to a growing class of savvy, ambitious merchants. At these auctions, the successful bidder wouldn't get the physical rice right away. Instead, they got a paper note promising its delivery at a future date. This was a crucial first step. The lords and their samurai got the cash they desperately needed, and the merchants got control over the nation's most vital resource. The city itself was built on this trade. The canals were choked with barges hauling endless bales of rice. The streets of the warehouse district hummed with the energy of commerce. This was a city where paper promises flowed as freely as the water in the canals. But this system was still full of risk. The samurai's income was chained to whatever the spot price of rice happened to be when they sold. The merchants, too, were exposed to price swings between when they bought the rice and when they actually sold it. The whole system was crying out for a way to manage this risk, to bring some predictability to the chaos. The stage was set in Osaka, a city where wealth was measured in grains of rice and traded on slips of paper. All it needed was a spark. The revolution didn't start with a government decree. It started on the ground, an organic evolution driven by the market. Those paper notes from the warehouse auctions began to take on a life of their own. Merchants realized they didn't have to wait for the rice. They could just trade the notes themselves. A merchant holding a note for rice to be delivered in 3 months could sell that note to another merchant. A samurai due to receive a rice stipend in the fall could sell a promise for that future rice to a broker for cash today. By the late 17th century, this informal trade in rice coupons became so active that it moved to a dedicated area in Osaka called Dojima. The real turning point came in the 1720s and 30s. The samurai class was suffering from record-low rice prices, and the government, led by Shogun Tokugawa Yoshimune, was under pressure. After years of merchants petitioning and the government giving tacit approvals, the shogunate issued a formal certificate in 1730 that officially recognized the Dojima rice exchange. This didn't create the market out of thin air. It had been bubbling informally since 1697, but it legitimized it. This transformed Dojima from a chaotic, informal system into the world's first organized futures exchange, which would soon develop its own clearinghouse functions to guarantee trades. So, what did they invent? The futures contract. Think of it like this. A futures contract is like pre-selling a crop before the seeds are even in the ground. A farmer worried that wheat prices will be low in 6 months can agree on a price today for his future harvest. He locks in his profit, and the buyer locks in their cost. They traded a promise. This is exactly what happened in Dojima, but on an industrial scale. They created standardized contracts for spring, summer, and winter rice. A trader could buy or sell a contract for a specific amount of rice to be delivered at a future date, at a price agreed upon today. But here's the leap that separated Dojima from everything before it. The vast majority of these trades were settled in cash, without any physical rice ever changing hands. This was the trade of empty rice, trading promises and obligations on a commodity that might not even exist yet. This allowed for pure speculation. If you thought the price of rice was going up, you'd buy a futures contract. If it rose, you could sell the contract for a profit without ever touching a single grain. If you thought the price would fall, you could sell a contract, hoping to buy it back later at a lower price. This injected a massive amount of liquidity into the market. It let the samurai and daimyo sell their future harvests months in advance to lock in a price and get stable cash flow. And it allowed merchants and speculators to profit from those price movements. The exchange itself was a whirlwind. Prices were sometimes set using a method called hinawa nedan, or fuse cord price, where a lit fuse was placed in a box. Trading happened at a frantic pace until the fuse burned out and ignited a small charge of gunpowder, signaling the close of the session. It was fast, loud, and revolutionary. They had untethered the idea of rice from the physical grain, transforming it into an abstract financial instrument. And the samurai, just by looking for a cash advance, had laid the groundwork for a system that would one day dominate the global economy. This intricate system of paper promises created a new kind of battleground. One fought not with swords, but with information and psychology. And in this new arena, one man would rise above all others, a trader so legendary, he'd become known as the god of the markets. His story is coming up right after this. If you're finding this hidden history of finance as fascinating as I do, take a moment to subscribe and hit that like button. It tells the algorithm that stories like these are worth sharing, and it makes sure you won't miss our next dive into the unexpected origins of our world. In the chaos of the Dojima rice exchange, where fortunes were made and lost in the time it took a fuse to burn, one trader saw something nobody else did. His name was Munehisa Homma. Born in 1724, Homma was destined to become the most legendary trader in Japanese history, a figure so mythic he's still called the god of the markets. While other traders were focused on the fundamentals, weather, harvests, inventory, Homma realized something profound. The price of rice wasn't just about supply and demand. It was about human emotion. He saw that the market was driven by the collective greed, fear, and panic of the traders themselves. The psychology of the crowd, he believed, was the most powerful force of all. To see and understand these emotional waves, Homma developed a revolutionary tool, the Candlestick Chart. Each candle plotted the open, high, low, and closing price for a period. The thick part, or body, showed the range between the open and close. If the close was higher than the open, the body was hollow or white, today usually green, a bullish signal. If the close was lower, the body was filled in or black, today usually red, a bearish signal. The thin lines, or wicks, showed the highs and lows of the day. This simple chart was genius. It didn't just show price, it told the story of the battle between buyers and sellers. A long white candle showed buyers were in total control. A candle with a long upper wick showed that buyers tried to push the price up, but sellers fought back and forced it down. Homma meticulously studied these patterns, giving them evocative names like 3 Black Crows or Doji. He realized these patterns repeated because human emotional reactions are often predictable. Spotting a bearish pattern was like seeing panic spread through the market in real time. He wasn't just trading the harvest report, he was trading the market's mood. But Homma didn't stop there. He was also a master of information. Living in Sakata, hundreds of kilometers from Osaka, he needed real-time price data. Legend has it that he set up his own private communication network, a chain of men with flags on hilltops every few kilometers between Sakata and Osaka. This system would flash price information far faster than his rivals, who had to wait for couriers. Armed with his understanding of market psychology and a superior information network, Homma was unstoppable. He reportedly pulled off over 100 consecutive winning trades, amassing a fortune that would be worth billions today. In 1755, he wrote, "The Fountain of Gold, the Three-Monkey Record of Money," one of the first ever books on market psychology, where he laid out his core principle. When all are bearish, there is cause for prices to rise. Munehisa Homma wasn't just a rice trader, he was the world's first great technical analyst and market psychologist. He turned the market's chaos into a science. The Dojima rice exchange wasn't just a financial market, it was turning Japanese society completely upside down. That rigid, 4-tiered social structure, with the samurai at the top and the merchants at the bottom, was being blown apart. The chonin, the merchant class, were traditionally looked down on. They didn't produce food like farmers or fight like samurai. They just moved goods around and dealt with money, which was seen as a dishonorable pursuit. Yet through their mastery of the rice trade, these lowly merchants were becoming the shadow bankers of Japan. The irony was staggering. The proud samurai, the nation's warrior elite, were now deeply in debt to the very merchants they scorned. A samurai needing cash would go, hat in hand, to a rice broker in Osaka. The broker, a merchant, would give him a loan against his future rice stipend. The power dynamic had flipped entirely. Warriors who once battled foes now had to bow to brokers for a line of credit. The merchants had become the unseen shoguns of the Japanese economy. This didn't go unnoticed by the government, which had a complicated relationship with the exchange. The shogunate was addicted to the cash that Dojima provided. The market was essential for funding the government and keeping the samurai class afloat. But they also feared it. Speculative frenzies over empty rice would grip the market, leading to wild price swings. When prices soared, the urban poor couldn't afford to eat and would riot. When they crashed, the entire samurai class was threatened with ruin. The government repeatedly tried to ban speculative trading, but it almost always failed. The market was just too powerful. An attempt by the later Meiji government to abolish the exchange in 1869 caused so much chaos, they had to bring it back just 2 years later. This new financial world was also powered by a revolution in information. To make the market work, prices had to travel fast. Homma's legendary flag network was just one example. An official system of flag-waving communication was developed to transmit Dojima's prices across hundreds of kilometers to other cities. Men on mountains used large flags and telescopes to relay signals. It was the 18th century internet, a network built to serve the market's insatiable hunger for data. The Edo period, which began as an age of enforced stability, had given birth to a transformative economic engine. The Dojima exchange had inverted the social order, created vast new fortunes, and proven that in this new world, financial power was more potent than the sharpest sword. The story could end there, a fascinating chapter in Japanese history. But it doesn't. The systems forged in the Osaka rice pits became the blueprint for the entire modern world of finance. The samurai's desperate fix left a ghost in the machine of global capitalism. When the Chicago Board of Trade, CBOT, was established in 1848, it faced the same problems as 18th century Japan, dealing with a volatile commodity, grain, and needing to manage risk. The founders of the CBOT, whether they knew it or not, adopted a structure that was uncannily similar to the Dojima model. Standardized contracts, a central clearinghouse to guarantee trades, margin requirements, all of it was pioneered at Dojima. The world's most influential futures market was built on a Japanese foundation. And the legacy is even more personal than that. Every time you open a trading app or see a stock chart on the news, you are looking at a direct descendant of Munehisa Homma's invention. The red and green candlesticks that chart the fortunes of everything from Apple stock to Bitcoin are the same tools he developed to analyze the psychology of the rice market in the 1700s. His idea that market movements reflect human fear and greed is now the basis of technical analysis, used by millions of traders every day. The next time you see a financial report and a chart flickers across the screen, remember where it came from. That visual language, which directs the flow of trillions of dollars, wasn't born in a New York skyscraper. It was born on parchment paper in Sakata, Japan, created by a rice trader trying to get an edge. That candlestick is a ghost, the ghost of a samurai's debt and a merchant's ingenuity. The evolution continues. The Dojima Rice Exchange was abolished in 1939, but its lineage survives. A successor, the Osaka Dojima Exchange, ODEX, exists today, a modern continuation of a centuries-old tradition. From the desperation of a warrior class with no wars to fight, an entire financial ecosystem was born. The concept of hedging risk, of speculating on future prices, of trading paper promises completely divorced from physical goods, these are the pillars of modern finance. The samurai just wanted to pay their bills. They ended up inventing a key piece of Wall Street. The story of the Dojima Rice Exchange shows how the biggest changes often come from the most unexpected places. It wasn't kings or generals who invented modern futures trading, but a class of obsolete warriors trapped by peace and a clever merchant class who saw an opportunity. They started with a simple problem: a salary paid in rice in an increasingly cash-based world. Their solution, trading paper promises for future rice, was a practical fix. But that simple fix contained the seeds of a global revolution. It gave us the world's first organized futures market, standardized contracts, and cash-settled speculation. It gave us a legend, Munehisa Homma, whose insights into market psychology and his invention of the Candlestick Chart are still the bedrock of financial analysis. And it created a system so effective that it was replicated a century later in Chicago, becoming the model for the entire world. So the next time you think of the samurai, maybe picture this: not just a warrior with a sword, but a man in a gilded cage, whose struggle to pay his bills accidentally drew the blueprint for our modern financial world. Their legacy isn't just one of honor in battle, but of an unintended financial revolution that proves, once and for all, that the need for cash can be more powerful than any sword. If you enjoyed this journey into the hidden corners of financial history, make sure you're subscribed with notifications turned on. And if you want to support more deep dives like this, consider joining our community on Patreon. Thanks for watching.